TGIM warriors. Anyone thank God for Mondays? Because they miss the markets for a few days? We'll wait till next weekend. Anyone else like me?
Nope.
Miss the action? You're not like that?
I hate Mondays.
Anyway, good morning, good afternoon, wherever you're at. Ingmar, how are you? Steve, Bran, Arlo. I think we have a lot of data, don't we, this week, Ryan? Crunched in here. Hugo, Glenn, Mike, Blake's here, Ryan's here, Kayman's here. Full team. We have Stellios making a cameo here today after his vacation. Sometimes you see the markets better after being away. Just another Manic Monday. That's a great song. Okay. All right. Kurt, hi, buddy. So we'll go to Stel right away. I just want to show something here. And it's a feature here at ForexAnalytix. So active pattern and plays, if you know any of the analysts, you can follow the guys that you like. Maybe you have a little more confidence in what they do. I find it interesting that Leandro and Andre, you guys may not know them, but you should get to know them. Spanish speakers really need to get to know Leandro. He's a great trader. He does live X Trufa webinars every week, I think a few times a week, 2-3 times a week. So you want to check him out, and you want to check Andre out as well, because a lot of people, I know Blake shows some harmonics, but you could learn a lot from, for example, the kind of stuff that he does. He's a pretty good artist here. He's looking at the pound for maybe a high up here. All right, so we'll see what happens, and then a pullback to 31. So when you join, you get harmonic stuff, and the best kind of trades are when you see a few of the analysts using different methodology that are coming to the same conclusion. It's almost like having confluence for a trade. Anyway, I thought I'd feature it this morning. You could learn by following people with different techniques and get dangerous like I am with Elliot. Okay, so Stel, good morning. How are you?
Hello, bonjour.
Yeah, that's right. Yeah, so Stel was in France and went to, they call it Disneyland in France?
Euro Disney, whatever, same thing.
You're,
Only a lot
yeah.
smaller than the American one.
Why, have you been to the American one?
I've been to one in Orlando many years ago.
Oh, yeah, Disney World down there too.
Yes, exactly.
Okay, so you have rates moving your way finally.
Well, not decisively, but yes, we
Okay.
still. Let me take the screen
Yeah, go ahead.
and show a few things.
Okay.
Uh,
Why don't you
yeah.
turn your video cam on so everyone could see you wearing the Mickey Mouse ears? I know you got some. Come on, man, put it on.
A bold Mickey Mouse. You don't want to see that.
All right. That's
So,
why you wear the hat.
yeah. All jokes aside, it was so much fun, and we went to the museums and everything. It was fantastic. So
You have a good
rates
life.
are moving lower, yields are moving lower. Still not, we're still in kind of in the middle of this big wedge thing. But I've said for a while, I think that the yields are going to be going lower and testing this support trend line. Of course, it's going to depend on a lot of things, but we had Trump continuously pressuring Powell. And let's face it, governments want low yields. They want a flat curve at 0% if they can, because of all the debt they have to service. So there's a natural will for rates to be lower, not only because of the debt, but also because when rates are lower, things tend not to crash in the environment and in the economy and housing. So I think we're seeing 10-year US back down to 425, which is right in the middle of this kind of broad range. And again, if you put a gun to my head, I think they're going lower. So with that being said, and with yields potentially going even lower, I see the dollar following suit. And remember, I drew this some few weeks ago, and I said, look, I think this is what's going to happen. I haven't touched this. It's going a little bit faster than I thought, but still, we're heading towards the bottom end of this channel. We're not that far away, a point and a half, 2 points away on the Dixie, and
Yeah.
then we'll have to reconsider. But until then, I still think we have a little bit more to go. The market's getting quite bearish, the dollar now, so that's starting to become a bit dangerous. When the market goes one way, it's probably the time to go the other way. But I do think that we will go just a little bit lower. So with those two things happening, what happens to risk assets? Well, theory says they go higher, because when yields go down and when the dollar drops, risk assets rally. And what have we got? We've got new all-time highs in the S&P and the DAX following close behind. Not new all-time highs yet, but we're very close.
Well, that's a little bit of a change. They normally, well, recently, DAX would make new highs before the US.
Absolutely right. And I think that was a main sign of asset allocation moving out of the US and into European stocks. Perhaps that has been the case, but of course now we see the S&P kind of leading the way at the
Yeah.
moment. But
Took
we're
the
still
baton back.
Yes, but as I said before, last time I was on, what was it, 10 days ago? You put a gun to my head, I'll still buy these. Valuations are still very high. There's no real reason to be chasing this. But if you're long, absolutely no sign of reversal yet, so I wouldn't touch longs at the moment here. Just let them run and see what happens. And as long as rates don't spike and there's no World War III happening, I don't think there's anything to stop equities from going just a little bit higher. So with that being said, let's have a look at metals as well, because we always do. Gold is, well, consolidating sideways. I had this drawn like this, maybe it's something like that. I don't know, but it's still a sideways consolidation, higher highs, higher lows. So anything bearish here? No, I don't see that. Having said that, gold has been doing really, really well over the past year or 2 years. So there will be pullbacks, but I think that this is going to be a buying opportunity when they happen. And it's a similar thing with silver. For those who are ForexAnalytix clients, they will know that I took off half my silver and platinum longs about just over a week ago. So we're kind of trying to decide if we're going to go higher or lower from here. I'm looking at the kind of mid 33s to reload again if we get there. But we could see a reversal. Absolutely possible. And a similar thing with platinum. And platinum, if you zoom out, you'll see just how important this zone here is. It's been over 10 years that we've had lows and highs here. So we try to break it, but now we're right in there again. So it's not convincing yet, although platinum is looking really, really strong. I took half my longs off because, this move has been incredible over the past few weeks, and doesn't hurt to take profits, right? So and you have to be nimble in this market. So that's what I'm doing there. We have to mention cryptos as well, because they have been underperforming recently. Although, Bitcoin is close to all-time highs, but with stocks rallying, cryptos are kind of lagging, especially the altcoins. Like Ethereum is going nowhere, even though Bitcoin is near its all-time highs, and all other altcoins are the same. It looks like Bitcoin is still the one to have, and still quite close to its all-time high. So again, if you put a gun to my head, I would still buy this. I would still buy Bitcoin, although it tends to move. Fundamentals are a bit iffy on cryptos. People will hate me for saying this, but it's just speculation and other things that drive cryptos, not really any major fundamentals behind. And but anyway, this is what it is. And what else? We have a couple of currencies which are interesting, like the MEX. we are now heading towards this zone around 1850, 1870, which is quite important. Remember, Dolomex short has good carry, about 4%. So that's not a bad thing to be paid to hold the position. And Dollar Norway also seems to have broken out of this channel, kind of retesting. And I like this to the short side as well, with a caveat that I think that the dollar weakness will come to an end at some point. We have a little bit more to go. But after that, yeah, I think the time will come to be bullish the dollar. So patience with that at the moment. Otherwise, oil has been an absolute lunatic, as it usually does. And if you go on the daily chart, we saw all the gains erased within a couple of sessions. And for good reason as well, because the whole issue between Iran and Israel for the moment is off focus. It's not an issue anymore. And let's face it, with the fact that Iran doesn't, I have people saying, oh, what happens if we get World War III? Or something, major escalation. And I'm like, okay, who's Iran? Who's going to be on the side of Iran? Very few, even China and Russia, they've taken a step back. So really, I don't see any way that this can escalate in terms of a global conflict. The only instrument really that responded to this crisis was oil, and it's gone back down into the zone again. So nothing to do on oil at the moment, but we have to remember that I think that the risk is for us to be going towards lower levels again. That's about it. I don't have much else. Sterling, euro pound has been moving between, well, for years now, between kind of 80, low 80s and 90, with an intermediate zone around 85. We're above that. So this is, I think this is bullish as long as we're above the 85 level. Just another thing to keep in mind, any dips towards the 85.15, I think is probably not a bad risk reward long. I might try that actually. But otherwise, I'm just standing pat on my positions, not doing much yet, and mainly looking to reload metals, but not at these levels, at quite a bit lower. And if they do happen to rally, well, so be it.
Yeah. Hey, Stel, what's your favorite aspect of the platform that we have?
Favorite aspect of Forex Analytics, I mean?
Yeah. Yeah.
The community, number one, the chat room.
Okay.
It's absolutely number one, and obviously you have all of us there, all the analysis, and
Didn't take long for that answer.
yeah, and you know what? When I was on holidays, I would go into the chat room. I wouldn't interact, but I would go in and see what people are saying because I'm missing everything, right? I'm out all day. It was a great way to go every few hours and check what's been happening. Absolutely fantastic.
Okay. Brand says face, edge, and chats. Thanks for including face, Brand. Okay.
I'll
Well,
pass it back
thanks.
to you, Coach.
All right. Thank you, buddy. Glad you're home and you and your family had a great time.
Thank you.
Good to have you back. Okay. All right. So let me move to the team. So Ryan, good morning. How are you? I know you hate Mondays, but how can you make Monday a little better? You see anything actionable that you're thinking of here in the currency arena?
Not right today. I think this is a bit of a calm before the storm this week, because as you say, we've got a busy week, a shortened holiday week.
Yeah.
So really, from tomorrow, Wednesday, Thursday, we've got a ton of data, all the PMIs, ISMs, ADPs, challengers, NFP on Thursday. So it's price action this morning is a little bit lacking. Let's call it that. But after last week's fun and games, no surprise to see the market taking a foot off the pedal. We've also got the big central bank meeting, the ECB central bank meeting in Portugal, Sintra, tomorrow, an hour and 15 minutes from now. We've got Powell, Bailey, Ueda, the guard, all sitting down for a chinwag. So that might be something to keep an eye on as well. So
define chinwag.
Well, I'd like to say they're going to line them all up in a panel and shoot them, but I can't say
Okay.
that. They're going to line them up in a panel and fire
All right.
questions at them.
I don't know. Yeah.
Today's a homework day. Today's tidy up your charts, get your levels ready, what you want to
Yeah.
trade this week, and get yourself prepped. There's
What
always
do
something
you
to do.
think the big mover is this week? NFP on Thursday?
Well, that's the question. Yes, NFP could be a big mover, but we're also in the window now for the next trade deal deadline.
Oh yeah.
I mean, look what happened with the Loonie on Friday.
Yeah, I was going to bring this up.
Yeah.
And I guess they settled now, right?
Oh,
Canada capitulated?
well, they tried the old Mexican standoff, and Canada lasted about 5 hours or less than
Wow.
that before they threw the towel in. Yeah, they introduced a digital tax. Trump said, "Okay,
Right.
we're not going to talk trade with you anymore," and then a couple of hours later they dropped it. So make of that what you will. But we're getting into the window now where the market will start paying attention to all that, because Trump's going to be all over the social media saying, yeah, we're going to write letters and tell everyone the tariffs. But seriously speaking, I think out of all the countries, I would say we've got to watch Japan, because they're the ones that seem to be, real loggerheads over a trade deal, when you would have thought that would have been one of the easiest.
Yeah, and how about Europe? He's not a fan of Europe.
No, I think they'll either cobble something together, or at least they'll get a can kick, because let's face it, Europe is probably the biggest block to get a deal without, next to China. So I can see that getting a bit of a can kick if they are all negotiating in good faith, as Trump said previously. But yeah, I think Japan could be the fly in the ointment as far as price action goes.
Okay, and is that going to generate a weaker yen?
Most likely.
Okay.
Yeah, I think that's going to be the.
I thought we might try 43 first as the dollar tries to push to one more low, but we'll see. You know what? I think it's interesting that we had this spike in the loonie, and Canada folded, but really it hasn't given up all of its gains, even though things have been settled. And in fact, even if the dollar has some more downside, it's possible that Canada's already bottomed. I mean, maybe we move even get down to 36 or something possible, but back over 37 and a half, you've got a pretty big move. You have, 139 and a half, 140. So if a lot of the other currencies like Euro's making new highs and cable's making new highs this week, and Canada's not making a new low, that's that's a tell to me to go with the relative strength. What do you think?
Yeah, no, I think you could be right. I mean, the low on Friday got right back to right back on a zone. I've got a big old zone, 136.15 down to 135.85.
Okay.
We hit that low right on the
Yeah.
top of that zone. It's one of those big yearly long ones. So
Cool.
yeah, it looks, all intents and purposes, it looks like a step up from that prior low that we got, that was pretty
Right.
solid, down at 135.40s.
Because they should have creamed it. They should have creamed it on Canada folding, right? Don't you think?
Yeah, they should have done, but they didn't. They undid the wobble, and that was it. And then we got this 136.50, which is proving to be a real pivot at the moment.
Okay. Thank you, Ryan, buddy.
Thanks, mate.
All right, Kayman, buddy.
Dale, sir.
Hey, good. Do you like Monday?
Well, not particularly, but I don't hate it either.
All right, well, there you go. You have balance. So what? No extreme emotions here. So
not right now. Could change over the course of the week, though.
Mine does a few times an hour. So what are you looking at here, Kay? What's got your eye?
We're month end. We're month end. And speaking about month end, we still have our thing going, yeah. Where we but maybe maybe Blake will show it in a second, where the people can
when
send their
they
email and
yeah,
have a chance to win a trader funded account. But we are month end, quarter end, half year end, so it could get a little messy in the upcoming couple of hours. Models were still calling for dollar sales, but I must say that if you look around the spectrum, where everything was, well, where the dollar really got hit over the past couple of weeks, we stopped in extremely or very interesting levels, at least.
yeah,
Euro dollar around 117 and a half, Aussie
yeah.
dollar around 65 and a half, had a blip above, but then came back. Kiwi, same thing, around 60, 80, 85, and especially the cable, I would say, 137, 40, 70. And we tried the area a number of times, and we are shying back from it. So is the dollar ripe for a bit of correction once we are past the month end, or is it that the models were wrong and that there's actually not a lot of dollars to sell? I don't know, but it's going to be interesting once we are over this hump, Dale, and I'm
Well,
I'm running reduced positions for now because there's enough data upcoming. And as Ryan already said, there's this ECB meeting in Sigtra. There's enough happening this week to show us a continuation or a fresh direction for a while. So
okay.
yeah, I'm keeping my powder dry. Still a bit short dollars, but if I see a leg lower on the dollar into the London fix, I'm probably going to take a lot of it off and just go on. Yeah, get my aims right again and see where I'm going to shoot at once the new month starts.
Okay, just you know, point it out to our community. This low was 53.6.
Mm,
This low was 53.6. Last night's low was 50.
mm,
So there again, okay. Anyone who was bottom picking and put their stop under 53 at 52 because they didn't want to risk too much are out of the trade with a potential turn and a divergence above 30 for the first time in a while in the dollar.
mm.
Dollar may have bottomed. So
Yeah.
doesn't it feel that way to you? I mean,
Well,
I'm
I
not
started.
adding to it, but
Mm, I started to have this feeling on Friday,
yeah,
and that's why on this way up I took. Excuse me, I took off quite a bit of my euro dollar, quite a bit of my cable. Um, I already said it last week because it just the levels are relatively important because if you really decisively break 117 and a half euro dollar, you're probably going to break that low on the Dixie because it has such a big percentage
yeah,
of the index, and then we're probably going to be looking at probably 120 on the euro relatively quickly. But there's many of those zones around in the currency pairs, and I think it's telling, or at least people who had like not day-to-day positions, but for a bit longer, let's say the short medium terms, they are more than happy to take some off here as well and to wait. And I'm in that boat, you know. And I'm in the same boat on gold. I don't have anything running for now because we are still in perhaps taking off some of those hedges, and now we need to wait what's going to happen next. I think just below that 32 and a half is the first level, or around 32 and a half on gold. We went there during the Asian session and then bounced. But I'm more interested to know what's going to happen in silver closer to 35. I really would hope the market to go and have a look at 35 and then tell me what's to be done over there. Because in current context of risk, I'm still preferring silver right now. Yeah.
okay. I want to get Blake in, but just point out that you know, I talked about the NOK really holding up the best against the dollar, and it looks pretty good to me. I mean, it looks like it's an advanced version of what USD CAD could do. I wouldn't be short NOK here. I'm going to turn it over to Blake because you know, doesn't have much time. to get his stuff in here. Blake, how are you, buddy?
Good. Well, first of all, good morning, everybody. Happy
morning.
Monday to you. As you know, Kayman was saying about giving away a trader funding program. There's literally just one more day. We're doing a giveaway for you guys for this month, the month of June. So if you want to learn more about trading analytics and the launch that we've got coming up here in the next couple of months, just put your name and email address in there because in this is the coming soon page, so it's the one right in the middle of Forex Analytics. Ryan maybe can put it in the chat box. Make sure you put your full name and your email address. I know some of you will put multiple email addresses because you want to try to win, which I don't blame you. So because I'm not going to stop you. So make sure you do that. It's right in the middle of ForexAnalytix.com. So this way you'll be on our newsletter list that goes out every Sunday. Also, since we're talking about this type of stuff really quick, if you guys are trader funding program traders or you've been kind of interested in it, there is a 30% off sale that's coming on July 3rd through 9th through 7th. Sorry, July 3rd through 7th on all plans, 30% off. I think this might be the first time that you guys are hearing about it. And I know there's so many of you that wait for these sales, and it's a great sale. So, take advantage of that this weekend. It's for basically the holiday week that we're celebrating over here. All right. So as far as the dollar goes, I just want to say something before I even get started on like end of month flows and kind of parlay off of what Kayman was just talking about. On Friday, there was this big move in the Canadian, and basically Trump said, we cease all discussion or trade discussions with Canada. He was really, Canada tried to hit us with this digital tax, and so Canada dropped it. The dollar Canadian actually just went. It was like that was a hell of a move. I was on the way. I was actually packing to go to the lake to go wakeboarding and surfing, and then all of a sudden this happened. Just as I was like literally walking out the door, and you can see it gave it all back. Obviously, Carney and Trump actually talked over the weekend, so there's that. It was a really, really big, nasty move. But to your point, Dale, the dollar CAD has held up very, very well. I mean, it hasn't been hitting new lows. Now, you guys were just talking about, has the dollar bottomed? I want to also point out that the 117.50 is such a big level. It's so big because it's the 78% retracement right here of this entire move from the highs of 2021 to the lows of 2022. It's also the 161% extension of the breakout, but I can't turn bearish the euro or bullish the dollar until we get back below 116.50. This is the big breakout point. It's 116.40, 116.50, whichever number you want to look at. Doesn't really matter because it's around that level. As long as we're above there, we got to stay bearish the dollar. I mean,
Can I ask you
go
something,
ahead.
Blake? If that
Go ahead.
harmonic, I know that harmonic, it's a Gartley, I believe.
Yes.
That takes it to 120. What type of harmonic would it be if we didn't get there? A crab?
Well, it could still be a Gartley here. That's the point you're trying to make, I think, is this could still be an actual Gartley pattern. The only reason, well, there's multiple reasons why I target 120. It would be, trend line resistance or potential triangle resistance.
Okay.
88% retracement, 161% extension.
Yeah.
So in my opinion, there's more confluence for a stop, and it's a big round number. And also, you look around and you're like, the dollar's been sold. I mean, that's just, I mean, it's not like we've seen, the euro backing off at all. It's still reluctantly going higher. But there's, big levels, I mean, look at like cable's 138 is huge right now. It's 161% extension up here in sterling. We're getting towards some pretty big levels. But if the euro makes it to 120, well, sterling's probably going to make it to this long-term trend line that comes in around 140. you think about where it all lines up. I'm not saying that we're going to do it, but I don't see anything stopping us just yet. And that's the thing. I do want to buy dollars. One of the trade setups from the week ahead video is sell euro above 119.50. You know, it's if we see it. I want to be selling up there. I'm not sure I'm going to get that opportunity. I think most of us would be, happy to be selling the euro up at those levels. If we ever got there, but I think there's a good chance that we still get up there. It doesn't look like the euro wants to back away. And plus, as you know, we've been discussing, we have end of month, end of quarter, end of half year flows, and it's supposed to be dollar selling, but maybe all that dollar selling has been done over the last, week or so. So today's going to be a rather interesting day from it's going to be a rather interesting day as far as flows go. But I agree with Mike. Everybody and their dog and the dog's uncle's, mother's, sister's, nephew's monkey is short the dollar right now. But at the same time, sentiment is not extreme. And from a DSI standpoint, and I still think that the dollar has some juice left in it, potentially. And I've been gladly selling dollars since, that German announcement right here. I mean, but at the same time, as I told you guys 3 weeks ago, I'm starting to play both sides of the market now. So it's a little trickier up here than it has been in the past. That's for sure. Well, as Dale, as you pointed out, I'm without time, and I know you have your guest here. I do want to say, and I think it's Patrick, right? Of Bad Charts.
Yeah. Yeah.
Yeah, I've had to interview him here
Yeah.
for you before.
Yeah.
But before I do that, like I said, make sure that you guys get signed up so you're the first to know about trading analytics and our launch here in the next couple of months. I'm going to see you on the Morning Edge with Steve. Even though Steve's listening in right now, we'll both be on the Morning Edge in about 45 minutes. And this is a very slow session right now. Oh, and then also one thing I forgot to mention. Don't forget, we have this big spending bill that's making its way through Congress right now.
It's big and beautiful.
It's big and it's beautiful, and there's an outside chance it could make it to President Trump's desk. Yeah, well, if it can pass the House, we'll see. But there's a good chance they could meet this July 4th deadline.
Hey, the guy's on a roll.
Yeah, I mean but big beautiful bill is a lot of spending, a lot of spending, but there's been a lot of pushback too from a lot of Republicans. So we'll see if it can make its way through Congress. But that's another thing that everybody should be paying attention to over the next couple of days, just to throw some other stuff in the mix.
A rebound in American exceptionalism.
Yeah, yeah.
Everyone counting us down and out. We're out of it. Money is going to Europe and everywhere else. You know what's going to tell you that's not true? The dollar. And I'll leave it at that. And all right, buddy. So thank you, Blake and Stel and Kay and Ryan. Tomorrow's turnaround Tuesday. Ryan loves it. His hangover's gone by Tuesday, and you're going to have some great ideas from him. And with that being said, there's Greg's look. It's great to always be able to talk to Patrick Kareem. And I have to say, Patrick and Kevin were way ahead the curve on this move in the precious metals, and their chart work is Patrick's like a technical artist when he does his work. So Bad Charts 1, checking in with you.
Hi, Dale.
How are you, Bad?
Man, I can't believe another 3 months. I looked, I saw your tweets as Bad Charts signed up this week, and I said, "What? What already?" It's like, what?
See,
what?
Pretty soon you'll be, you know, time goes so fast. You'll be my age. What
Well,
do you think of
yeah,
that, man? Huh?
it's
Better
kind of
start
scary.
work on that retirement account and not just speculation. So tell me, tell me what's top of mind going for this summer for you, Patrick. One thing that really I think was I read from somebody is that silver shares are actually outperforming the silver
Uh,
for the
s-
first time in I don't know how long, but
What do they
100
mean?
years
Silver shares?
are outperforming silver as of late.
What do
And
they mean? Like,
like
what's the difference between silver share? Oh, you mean the miners? No.
yeah, the
Ah,
miners,
the miners. Okay, yeah.
the
Okay,
silver
well,
miners are outperforming silver,
yeah.
which
Well,
is
let's look
that
at that
is
there. I had a few charts lined up, but let's look at what are they doing? SIL, SILJ, maybe?
I don't know what they're doing, but it was an eye opener to me because
Yes.
it's been the other way for so long up
Well,
until recently.
so a good trick I have, guys, is step one is to let's start with a bird's eye view. So here's I have SIL. I think the main component might be pass or some of the big ones, but and look at that. So here's silver. If this thing's going down, that's silver outperforming. And indeed, here we have
Yeah.
some type of bottom forming. That's a 12-month and the 36-month moving average. And indeed, that seems like yeah, right now.
Okay, so that's a gold silver ratio in reverse. You do it silver gold.
No, this is the miners, the silver miners
Oh,
priced in silver.
okay.
So
All right.
it's you're right.
So it
They're already
shows
in an
a
uptrend.
breakout. Yeah, okay.
Yeah,
So
it's this is it's still embryonic. So what happens here often in when after a violent move down, there'll be some type of congestion area. It could be here, it could be maybe all the way where it is now. And
yeah,
when people get all excited and they say, "Oh, this is it, it's going to the moon."
it'll
But what
pull back.
happens here, you have a bigger formation forming, and
Yeah,
then you break out to do a reverse symmetry move
yeah,
upwards. So it's not. I don't think sometimes it can go up violently, but because this is a pretty steep angle trend line, often what's going to happen, you'll morph into existence a less steep breakout line, something like this, Dale. I don't know where exactly,
yeah.
but you'll get a swing reaction here, and then you get the takeoff pattern there somewhere.
So buy dips in the silver miners.
Well,
That's what that's saying.
instead of
Even,
silver. So yes, this is telling you if you want to look just as a silver miners, SIL. Oh, hold on. Did I do no, I did the good one. SIL on the Amex. So if I do SIL on the Amex, here's the miners. Yeah. Oh man, look at that chart. I hadn't looked at that in a while. So here you have the miners.
yeah,
Yeah, that's even a bigger breakout there. And
yeah,
it's gonna slow down because well, guess what? You're hitting a wall here. Previous support,
right.
turn resistance, 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 resistance. You see how every time and look at that we're discovering
Yeah,
resistance. So indeed, this is 100% a bull trend, bull market. That's this is the monthly chart, so it is they are in a bull market. And the next low risk entry, guys, will be once we break out of this line. That's when you get a crazy move because now you get some classical TA measured moves in here. I
yeah.
could do the base of this bigger pattern added on top, and that would probably be my multi-year target there. And let's see the long term. So we see this would be my play zone here. So in between maybe late 2026, somewhere in the 2027, we could be heading all the way up to 113 there. Wow.
Wow, huge.
That's
Yeah,
huge. Yeah.
yeah.
Ah,
So I think there's going to be a correction into late summer,
yes. Look
early
how stretched it is
fall.
here.
Yeah,
It is stretched from the moving average. So it's like this is how far we are. The bottom pane, guys, is how far we are from that red line. And when you've hit these, when you're that stretched area, you're begging for a correction. So remember, corrections is price and or time. So
yeah,
it doesn't have to, you see, this is a correction here. I'm going to draw you my moving average just for you guys to show you. So it's just about letting the price catch up, right? Sometimes people
yeah.
think, so it doesn't have to go violently down. It could go
No,
sideways and that's going to be healthy.
right. Right.
Wow.
So yeah, so it's healthier when it doesn't give it a lot back, and all it does is move sideways to correct the overbought condition.
Yeah,
So it's more of a
exactly.
time corrections are more bullish or bearish depending upon the trend. So You think there's a potential for, that I think it was 3,300 level was kind of significant in gold that we
Oh, yeah.
took out last week. Do you think that we're primed for a correction? We're pretty
Yeah.
stretched from your moving averages, etc.
Well, gold since August 16th there, I got a little backlash on that on Twitter. I'll try to find it real fast. Highlights. I pinned it in my highlights in Twitter because it was an important one. Okay, right here. So here, this is back from April of this year. And here again, this is the bottom pane, guys, is a distance from the 36-month moving average. And I said, look, as long as it stays above this rising trend line on the distance from moving average, it's fine. But I just said there's no low risk entries, guys. Even back then, I said no low risk entries because look how stretched we are. And there's a catch up. Even if the price goes sideways, there's often you'll see, or upwards, you have to let that moving average like refresh, unless you become you believe in statistical anomalies and you go in some crazy, it's like whenever somebody has a position, Dale, they always look at the outliers. Oh, well, it's going to be different this time. Oh, it's going to do like the 1970s. Sure, maybe. But if you're playing the probabilities, most of the time you see gold stays below this range, right? You could see this as an oscillator and it can't stretch that much away from its 3-year moving average, 36-month moving average without some type of correction. And since then, so you see here, it's been going sideways. It's still stretched from the moving average. It hasn't broken down. This would be worrisome if it would lose a rising trend line of momentum. And let's say I'll put the 8-hour chart, just remove all drawings, remove indicators, remove, okay, here. And I'm going to highlight April. What did I say? April, somewhere in April, right? April 16th.
Fools.
What? 220, not 2024, guys. April 2025, right? I said there's no low risk entry. Here's April. Okay, somewhere here. So here, this is what the chart has done since then. And it's essentially went sideways since then, right? We're starting correction.
Yeah.
But this is what I noticed just before our call. I was looking at charts. And this is what gold did just to further, because the correction has gone sideways, Dale, for all that time. Look what happened here on the 8-hour chart. I know it's super short term, but look at that very valid trend line, 1 point. Let me rise it a little bit here. Look at that very, very valid trend point. And if you're trend line, and look, you could put on the line chart to 1, maybe 2.
So it's vulnerable. Here. It's vulnerable. It could pop maybe back to the trend line, but don't you see like maybe the lows we had in May be like, clean that out where everyone stops will be long-term longs. And then maybe we have a better low.
Well,
down there.
Look, this is telling me that this line is resistant. So even if gold does rally, should be some type of congestion here. And then we see, because you remember often what you see after these breakdown lines is bear flags here forming often there like this.
Yeah.
So what I do now, not to like, people shouldn't be in gold unless your guys are stackers and all that. But as a trader, and again, depending on your time frame, but there's the next low risk entry for gold. It's going to be this line will probably morph into existence one day. I don't know how this is going to play out, but let's say we do get up here, and then that would be the next low risk entry would be somewhere here, a breakout above this.
Okay, by
this line here. I want it to morph into existence. It doesn't exist yet because we need a third reaction on it.
Okay.
And then if ever it closes above that, then that's you know what? It's so beautiful, this one, because this will make a good consolidation pattern, rinse out all the FOMO. Remember that the distance from moving average.
Maybe it's the handle of a cup and handle developing there.
This here?
Yeah. The whole thing. Since the hot.
Oh, here, cup and then a handle here.
Yeah.
Yeah.
Or the whole thing's a handle.
Yeah. So whatever, like people say cup and handle, but when I say cup and handle, what I see is a higher low, right? Because the cup is the the swing low, and then the handle is a higher low. So essentially, it's just telling you that you're starting to build an uptrend, and an uptrend, the building blocks of an uptrend is higher lows. But then after that, what you need to have a channel up, you need a higher high, right? So once you're able to do a higher swing high and you have already a higher swing low, then that's evidence that you're starting to trend upwards in a meaningful way right here. See, higher lows, but eventually it broke out here, somewhere here, broke out here, and then you're starting to do higher highs, further and further away higher highs, right? The more it goes, you're able to beat previous higher highs, and that means it's just from a higher time frames momentum is kicking in. So this is the pattern for gold, but there's no, it's not a good, it's a no man's land here, Dale. There's no, because in case this, what happens if this happens? Let's say the markets rocket and recession fears are off and it's just, and the bull run continues for the stock market, then you're kind of trapped there.
Yeah. Do you buy that argument that people are selling gold because they don't need it because tech stocks are okay again?
You know me, like I don't believe in narratives because it's crazy. Like just yesterday, I posted on Twitter. No, I posted a silver chart, and there was hyperbole, guys. If you see my Twitter, yes, I am like clickbait type, a little bit there, not crazy stuff there, but this is what I wrote: silver's make or break moment.
Okay. They don't like.
But on that time frame, Dale, that's an 8-hour candle chart. Like the long-term silver, I could show you guys. It's bullish because you cannot be. Look, I'll show you the monthly chart, guys. I'll remove all drawings. Look at that.
Did you get that quarterly close everyone wanted to see?
Let's do it. Let's go to the quarterly close.
I know a lot of people were talking about having that.
It's tonight, right? Yeah. This is, yes. So it's up here there. So we're not, I don't think it's going to make it there. Here's the highest quarterly close was back in Q1 of 2011. And it's not, I don't think it's going to make it there.
Okay.
It's missing juice. Sometimes, you go over the futures, it skews the chart a little bit. But even on the futures chart, we're not quite there yet.
Where's the bottom of the cloud if it pulled back the cloud that you have there?
Here, we will have a semestral highest close ever, highly likely. Like that, this semestral. So there's also semestral close.
Yeah.
But, it's not, I know people say all-time highs, all that, but you got to always be careful when you hear these all-time high, because after that, when somebody says, well, I'm above, the highest close ever.
Okay, well,
yeah, but am I stretched there? Because what could happen is, am I attaining that? Am I like here? You see in 2011 when it surpassed the 1979 semestral close. Here you see 2011, 2010 July here, that semestral close, and some people could have said, "Hey, look, we're above the 1980s semestral close, highest ever." Okay, fine. But how much juice, how much energy did you use? It took a 10-year bull run together. And look how stretched I was on the distance from that 36 semestral moving average. I got stretched there. Look at that. Look how stretched I got here. So you're running out of fuel. But look what's happening now, Dale. This is what's super bullish there. Look how I'm not stretched at all. Because it went sideways, it let that 36 semestral moving average catch up. Even if I close above that all-time high on a semestral close basis, look where I am here. I'm just breaking out. Like this is totally different because now you're not stretched, you're coiled in tight to those long-term moving averages, which is very rare. Like once you're coiled in tight and you start moving above, people don't believe the move, right? But these, it's like you have many candles, just like on the short-term chart. If I'm above shorter-term moving averages, you get it. Once you start having a golden cross, usually you get 10 candles at least, it starts trending upwards. Well, 10 candles on the semestral chart is 5 years. You could be, look at these bounces here on these long-term moving averages. Bam, shoot up, retouch. This is very, very, very rare there. Like people will only believe this move once we're super stretched. Once we the crazy stuff happens.
Take out 50.
When we're at $50, $60, $70, people are going to start, oh man, it's an uptrend. Guys, it's already an uptrend on the long-term charts. Here, higher lows, higher highs from this swing high. Now we're going to have a higher high dating all the way back here, while the momentum, my distance from my 36 semestral is just breaking out. I can't believe this. I'm going to have to post this for the members. I just noticed this one. I did a silver multi-time frame big picture review for the members yesterday, but I didn't notice that there was a breakout here. It's crazy stuff.
Yeah,
How
well,
could you?
sometimes you miss a chart.
Oh goodness. Yeah.
Scott, that's twice a year.
Yes.
Semi,
Yes.
semi, half
And the
year.
most important close of the year. So today is the second most important close because it's monthly, quarterly, and semi-annual. And then we'll have their yearly chart. And look at this beauty there. That's some pretty crazy stuff here. It's like
Yeah.
that's a 1 point, 2 points, yeah, maybe three here reaction. Like this thing's breaking out. There's still some room left on the distance from that 36-year moving average. I know that's kind of but it's
Are you a dollar bear like everyone else?
I was a bull until it reversed hard a little while back. I'll show you. And now I'm a bear until okay, this is wow, that's okay, that's the yearly even. Oh, okay, let's look at this. This is semestral. I'm gonna put the line chart, see if it's breaking down on the but it's not maybe a valid trend line. But look at that thing. That is, let's see where it closes today there. That's the and it was stretched here. You see stretched.
Yeah.
I'll put a resistance line to show people. So you see we were stretched from the moving average out, and this is a momentum breakdown. My goodness. 1, 2. So, oh man, this is not good. So this is what it's telling me is correction mode. So you can't be, you see, there's going to be some support down here, but what this tells me is we're going sideways there. That's what it's telling me. We're going sideways on that long-term chart. Here's the quarterly. Yeah, it's a breakdown. If it closes here, look at that. 1, 2, 3. And the momentum, like I could lower this. 1, 2, 3. Look at that, a breakdown. Look at that pattern. If I showed you this on a chart, on a price chart, you're not going to be bullish, right?
No.
It just broke down the momentum. So momentum's telling me. So here's my, if you want me to get bullish again, Dale, above this line here. You don't touch the US dollar until this morphs into existence. So there's going to be a crazy reaction here. Then you get bullish the US dollar, but you can't, there's no way you could touch that. Now, even like, even the USD CAD, like it had a breakout and then it just like, okay, all right. Well, that's a hard retest there. Not very pretty. It's not super duper there. It's not something you could pray and hope there, but essentially look at the momentum.
These are all monthlies.
Right now, I went down on the quarterly. I'm going to zoom down for you guys here. I'm going down on the monthly. So here's the monthly. The DXY has lost momentum versus the Canadian dollar. So the distance, look at that's a breakdown. The distance from that red line is failing, and often you'll see the momentum failing before the price fails. Often, so look at that. That's a what's very bearish? Not a breakdown. A failed breakout followed by a breakdown. That's more bearish than just a breakdown there, because you've trapped all these people here. I was bullish here. What do you like? How could you not be bullish when that thing broke out here? It's like on the monthly chart we had a crazy breakout, but then it's just falling apart there. So it's like no man's land.
You're in Canada, aren't you?
Yeah.
What do you think about all this back and forth stuff between the U.S. and Canada?
I think it's mostly noise.
Okay.
It's noise. What I think drives more these long-term charts there of the U.S. dollar and Canadian dollar. It's just interest rates. I think the long-term, you take the DXY or the U.S. dollar interest rates there, or the bond yields minus your bond yields minus our bond yields. Often that will track. So let's say I do the 0-2-year yields for the United States minus, what is it? CA, 0.2 yields. So let's say I do that chart here. Remove drawings. So that's our, and if I overlay the USD CAD on that, it's not 100%. There's more, I always trying to find charts that
correlate.
Oh wait, that's not, I gotta get a better one. USD correlate, not the cause, because and the better the correlation, the more. But look at that there. Not look at that. So when the yields of the US dollar, of the bond yields in the States start trending upwards, you see how the CAD USD started being the CAD. And then after that there was a down move. But and look at here. So look at the yields. Look how it's tracking pretty much the yields. See that?
Yeah.
So it's telling me that if the yield, maybe the markets are pricing in that the US yields are going to start coming down, and maybe the yields in Canada we're already down. We've already started a rate cutting cycle. So they're probably maybe starting to price in that this look how it's been tracking recently. Look at that.
Yeah, nice.
Look at that thing there. Look at that. So if you ask
Interest rate
somebody
differentials.
so what's driving the USD CAD? Well, bring it to a very simple level. And you're asking me, do you want to hold something that's giving you 5% interest, or you want to hold something that's giving you 4% interest? Just like forget all the noise. Of course, I'm going to take the 5%, right? Just from that standpoint. So this is maybe telling us that the US are about to cut. And there is, I'll show you here. I'm looking like a hawk at that 2-year yield chart. And it's not, look at the 4-hour chart. You can remove indicators, reset chart view. The 2-year yields have, they're starting to plummet there a lot. Here's a 4-hour chart. Here's the daily chart. And here's the weekly chart. Look at that thing. It's, this is my support line. It's kind of a downward sloping, which this could be bullish, but this could be a huge distribution top there, lower. And
or it could just be it could just be consolidation.
Yeah, it could just be sideways. So the way I see this
is
the
surprise for the market now that everyone's thinking, because of what the president is saying and the shadow Fed and everything. I'd say the market is in agreement of lower rates. There aren't many people thinking that the 10-year is going to head back up to 470 again. Do you think?
Well, the rates, they track the 36-month moving average of that yield chart. So here, let's say I put the, I'm going to remove, here's my 2-year yields. And that red line, guys, is the, goodness gracious. Here's weekly. I'm going to hide the price chart. So this is just the remove index drawings. And I'll put the Fed fund rate here. Fed fund new price scale. And look at that. This is a Fed fund rate, and this is a 36-week moving average, just to smooth out. And look at that over long periods of time. I'm going to put that back on regular scale. Look at that.
Yeah.
So if you want to remove the noise, so because maybe the Fed waits for more evidence, but look at that. So you see here, as it started dropping, the 36-week moving average, guess what the Fed did right after there? Look, the 36-week, this is on the, I'm going to merge everything on the same price scale on the right. So right now, the Fed usually tracks, like percentage-wise, the Fed's up here, so there's a gap here. Here, they overshot on the upside. So eventually, you see here, the Fed, they're below the 36-week moving average, below. Here, you see above, and then when it starts unraveling, they go below, right? Yeah. So at any moment, you could have some rate cuts there. It's like,
okay.
It's like, yeah, it's unless it starts turning, look, it started turning back up the 36-week moving average here, but now it's turning back down. And I could overlay the recession charts. Let's put that one here. And look, you find recessions when this stuff goes down. Not always, but you often find recessions, because if they cut, they're not cutting because everything's hunky-dory there. They're cutting because unemployment rates going up, non-farm payrolls, initial claims going up, and that's their mandate, right? Price stability, right. and or maybe both, full employment, I think.
Yeah, so they have they're jugglers. So Patrick, people want to follow you and check out yours and Kevin's work. Best way for them to do so.
Yes, of course. Well, you could get the stuff on Twitter, BatCharts1. But guys, all the good stuff's behind the paywall at northstarbatcharts.com. And maybe I could give you guys a discount code, NSBC Lifetime 50. If you're interested, get 50% off forever. You'll never pay more. Anyways, like there's a 7-day full refund, no questions asked. Because the website,
show it.
Sure. Okay. People, they could just, because you could ask questions, you could get our interactions on Twitter. I'm Hyperbole, this is the website, guys. You see, here's the silver big picture review we did. We have a trend navigator system. Like there's alerts. There's like, it's a full website where Kevin and I, we hear comments from members, and, we answer every single one. Something that you don't get on you can't get from Twitter all the time, you know, because Twitter, it's you know, it's wild, wild west, right? You don't know who's trolling, you don't know anything. But members, we know they're members. Here we have a knowledge base where we ramp up people. All the like the stuff that Kevin and I learned about TA over the time, we've created something to ramp up for beginner all the way to whatever professional, you know, all the things we use. There's quizzes. It's like this is our passion, right? It's our love. And you could do chart requests, like goodness gracious, like you could ask for charts that you have in your portfolio, and we just like we click here, and people like a bunch of members they request their stuff, and then we answer them. You know, this guy wanted this company, Voxar, reply. It's a full service
Nice.
website there. It's crazy.
Yeah. No,
Thanks
no,
for letting me
we are.
do a little promo there, Dale.
Oh, I always
Didn't
let you.
expect that.
Oh, really? Okay. Well, Patrick, I hope you and your subscribers have you know, a great summer and a bountiful harvest
Thank you,
going
sir.
into the fall. Appreciate you being here and sharing your excellent work with us, and always good to talk to you, my trading warrior brother.
Yes, thank you, sir. Thank
And we'll
you
see.
very much. I appreciate you. I appreciate everything you do, Dale. Thank you very much.
Thank you, buddy, and we'll see how fast the next three
All
fly
right.
by. Right,
Take
buddy?
care.
The next 3 months.
All right, buddy.
So that's a wrap, everyone. Don't just count your pips, count your blessings. And I'll see everyone tomorrow who join the team on the Morning Edge in 14 minutes. Don't just count your pips, count your blessings. Adios.